financial literacy, and the human condition. Welcome to Financial Fitness with the Money Doctor, Dr. Francis Rahaim.
Do you find that's the case with credit? That sometimes you see people who are totally credit worthy, but their score is lousy, or the other way around, their score is great because they pay everything, but they're doing it by leveraging their credit cards?
Yeah, I think the scoring thing is very funny to me. The example I always give is like you and I might have the same exact credit score, 700, let's just say, or 720. So it's good, but it's not great.
Yeah.
Except a couple months ago you were 650 and you're on your way up, and a couple months ago I was 820 and I'm on my way down. But a number's a number, and we both have the same credit score, and we're treated the same. And I think that's where we run into a little bit of the problem when we start to narrow things down to a single number, right?
Hi, it's Frances. I just wanted to take a minute to thank you for watching this video. If you're catching us on YouTube, please help us help others by clicking like, subscribe, and all notifications so you don't miss any videos. And check back for the next video. I think you're going to love it. Thanks again. For more information, you can visit us at hugyourmoney.com.
Welcome to Financial Fitness. I'm Jess Tyler, along with the Money Doctor, Dr. Francis Rahaim. Hi.
Hi, Jess. How are you this morning?
I am good, and we are joined by some guests.
We are joined by one guest anyway, Michael Tarquinio from Best Egg, a company that some of you may know as a lender and others as a financial service company, but I'll let him describe it. And what we're really discussing today is, if you are somebody who thought companies don't care about you, right? You're just a number. Michael and I got into a discussion about this, about the evolving relationship between companies and you. So treating the customer in a way that builds a relationship. And I just want to turn this over to Michael and say welcome. And please give us a little history about Best Egg.
So Mike Tarquinio, I'm the Senior Director of Customer Experience and Insights at Best Egg. Best Egg is a financial services company. Our core focus is on loan products. And our target market is limited savings customers. And when people talk about personal loans, they have this interpretation or this idea in their head that our customers are on the poorer side of the financial spectrum and that they have bad credit. And the fact is, through our research, we know that our actual customers are across the entire spectrum. So we have customers that do sit on the lower end of a credit spectrum, but we also have customers that have 750 credit scores who are making six figures. And they leverage our products as part of their broader plan for how they manage their money. So all year long, they're doing their thing, and they may take out a personal loan to go on a vacation. And then they pay that off over the next year or two, and then take out another personal loan to do some construction on their home. So people have this misunderstanding of what a personal loan is and how they might leverage it. But we kind of sit in there to help support people who are looking for some financing for an event or an emergency.
So you see a lot of repeat borrowers, is what you're telling me, right?
Some cases. So I break our customers into two groups. It's those who need financial assistance for an emergency. So car breaks down, there's a medical emergency, they've had a significant change in their income and need some kind of assistance. And then we have the planners who use personal loan as part of their ongoing plan to do things that they want to do.
Yeah, it's interesting that you say that because you led off with something that we often say too. There's a misunderstanding that the people that we deal with are, bad at managing their money or have no money or in dire straits. And it just isn't true. Most of the clients that both your company and mine deal with are middle to middle upper income with a decent credit score. They're just hanging on to the edge of the cliff sometimes, right? Yeah. Best Egg has done a lot of research, it seems. Have you seen a shift in the last several months? And can you talk about that in the way that customers are engaging with your company?
Engagement is pretty steady. We see an uptick when the economy starts going through changes. Any changes, we'll start to see an uptick. So rates come down, we'll see an uptick as people look to refinance higher interest rates. If the economy is getting bad or people are losing jobs, we'll see an uptick as people take out loans to kind of rebalance where they are based on the changes that they're impacted. We do a quarterly macroeconomic tracker. So we reach out to our customers and we get sentiment, which is, again, another way to say, how do you feel about a lot of topics, specifically financially related topics. And so the last one we did was beginning of April, and it was the largest significant negative slide that we've seen over the last 3 years. So how do you feel about your finances? How do you feel about the economy? Are you stressed about being able to pay bills? Are you stressed about the cost of living? All of that has slid more negative than we've seen in doing this quarterly for the past 3 years.
Yeah. It's funny when we do this research, we think we're going to be surprised sometimes, but more often than not, it just confirms our worst fears or whatever. So I would say, what does that really mean to somebody? That kind of a shift. What does that mean to someone who's living paycheck to paycheck?
Problem is uncertainty, right? Living paycheck to paycheck when things you feel are okay or a little bit more positive, I think it allows you to feel more comfortable in where you're at, right? So you're still living paycheck to paycheck, but there's some optimism. There's a light at the end of the tunnel. There's even some potential, idea that you're going to get there. You're going to overcome the debt. You're going to finally get where you need to be. When we see all of these changes and people start having the negative sentiment, I think that's where people are impacted the most, right? So you're living paycheck to paycheck, but now you don't know if that paycheck's going to come in the next couple of weeks. You don't know if that cost of groceries is going to go up, is rent going to go up, or the cost of my basic living essentials going to go up. So now I'm getting further and further into debt. So I think it's that shift that impacts your day to day when you're living paycheck to paycheck.
I know that somebody out there will laugh at me when I say this, but this is a fun conversation.
Well,
Believe it or
so
not.
I'm a data person, and so when you can look at
Yeah,
data that reaffirms some of the things you think or contradicts it, it's great because you have something that you could pull up and say, oh, well, look, I have proof, I have evidence that shows this. And I think that's what makes it interesting. It's not that it's interesting that things are right now negative or appear to be negative. It's that we have the data that shows this and we know the impacts. And from an organizational perspective, it allows us to react, right? So we
that's right.
see this negativity, we see the sentiment starting to turn down about the economy. So what we do is we look to drive people into areas of our business that offer support and help. So we have an element of our organization called Best Aid Financial Health. It's the area where we drive people for a lot of basic tools to help support them thinking through how they will manage their money or their debt, or to think about like, what does it look like? What is debt to income currently do, in my situation? How do I overcome that? So we can start to shift our messaging and put people in position to be able to learn a little bit more about, overcoming that fear they might have based on the current situation.
Yeah, it really is a pleasure to see a company, approaching this with such intentionality. And it does sound like our paths cross a lot. We should maybe chat after the show about how our paths might cross and what we can do to help people. But what I'm hearing from you in this sort of ongoing thread is that, transactional support isn't enough anymore. We're dealing with people's emotions. They want to have a relationship. We need to have a relationship with them if we're going to keep their business, right? So, if I'm right, if I'm in line with your thinking about that, what can a company like Best Egg do uh, to ensure that trust and relationship are front and center?
No, we're definitely aligned. What we're seeing trends over time and in recent time, the last year, is that when sentiment starts to go down, it doesn't change their need for the money. So we still see applications going up. But what we do is look to focus on how we build a positive relationship with them outside of the transaction. So we know they need the transaction, and we've got videos and stories of people telling us how valuable we were in stepping in to help them solve a very tough problem that they were incurring. But we want to focus now on how do we build a long-standing relationship, not only from a business perspective, because at the end of the day, if we can build that relationship, it lowers our delinquency, but also we can help them along their path to feel more confident about the decisions they're making about their money. So we're on we have a goal for the next, I'd say, 18 months to 2 years to start looking at opportunities to develop stronger relationships with our customers. So being proactive, reaching out to them and inviting them to come back and learn about either some of our tools or reaching out to see if there's ways that we can offer help or support. We're examining ways to proactively look at potential stumbling blocks that sit in your path from a financial stability perspective related to making your payments. And like, can we be proactive and offer them payment assistance or ways to ensure that they stay positive about where we're going with the economy?
Absolutely. I wondered, I wanted to go back for a minute to something that you said a couple of moments ago about people being worried that if they're living paycheck to paycheck and they don't know if their job is going to be there, that that's an extra sort of catalyst, right? Or an extra load on them. Do you find that some people are wanting to borrow now, even if they don't need the money, because they're afraid they won't qualify for a loan in the not too distant future?
Great
Or,
question. I don't
or
have
do
the
they tell
details
you?
on that. Yeah, that's a very good question. I don't know that we have the specific details on that. We do have opportunity for people to give us some narrative about why they're taking the loan. Nobody's been proactively like squirreling money away. I think the concern would be is that like you're gonna get interest and start making payments on something that you may not need. So I haven't seen that in the data yet, but it doesn't mean it's not there. Again, they're not
Yeah,
going to tell you that most likely.
I can tell you, but I can only tell you from our cross section here that people will get a home equity line of credit and sock it away and say they won't take the money out. It's just a line of credit, but they'll qualify for it now because they're afraid they won't qualify later. And I have to warn them that it's not a given thing, that the bank can pull it at any time that they want to, because their situation has changed and they don't want to have that credit out there. But I have seen a sense that people are worried. Like, what do I have to get in place now to survive? And of course, we talk a lot about building cash reserves, right? Let's build cash reserves so you don't have to take a loan out for an emergency. Instead, you're taking the loans out, as you said, for something you want to do. And then, of course, we manage those loans with them so that they pay them off on time and early and all of that. But it's a very interesting position you're in, I would say, and especially to talk to somebody who's dealing with the data behind the scenes. Um, you talked to me a little bit off camera about something called the Nest. Will you tell us about the Nest? That's a research-driven sort of environment, right?
So a couple years ago, we founded a branded community called The Nest, where we proactively invite customers to come and join The Nest. The Nest is the community we leverage for research. So within the customer experience world, there's two main focuses. We have a whole broad voice of customer program that is reactive. So you've interacted with us in some way, and we will engage with you with surveys, digital intercepts, or the chat logs that are happening between our agents and you on our website. So that's our VOC program. It's reactive. We'll go into that data, we'll analyze it, and provide reports out to the organization. The Nest is really our insights group, right? So this is when various people throughout the company come to us and say, hey, we'd love to understand customer sentiment or customer decision or thoughts about something. So we'll go to our customers and we could segment that group by a lot of different demographics. And we bring things, questions or surveys or even designs, and we ask them for their feedback on that. And that directly impacts what we end up building. And I'll tell you, one of the greatest things, and this is a little counterintuitive, one of the greatest things to pull out of that is hard no's.
Yeah.
So you go in there and you have this idea that we're going to do this and it's going to work, and everybody's like, nope, that's a terrible idea. That saves us time and money. It's incredibly helpful as an organization to be able to get that kind of feedback. And when we get the yeses or we get the direction that we're on to something, that's incredibly helpful too. When we want to show our customers that we're listening to them, so when we get onto a scent and it's going in the right direction, we make sure that we drive that through our business team and our product team to have that built. Now, very rarely does a test lead to build in a couple of weeks. Usually it takes a couple of months to get through that process. And then we build it and launch it. And then it shows our dedication to meeting our customers where they are, listening to them, and ensuring they have what they need to be a successful customer and future partner as we grow our relationship with them.
Well, I couldn't ask for anything more than that. We do need to go to a break, but when we come back, I want to talk to you more about repeat borrowers and all the things that you're seeing emotionally in the market if you'll stay with us.
Great.
All right, Francis, can I get your phone number?
Of course, it's 413-773-3333.
Or you can go to hugyourmoney.com. We'll be back with part 2 of Financial Fitness with the Money Doctor, Dr. Francis Ram, next on WHMP.
Financial Fitness with the Money Doctor is underwritten by Franklin County Technical School. We build futures. Visit fcts.us or call 413-863-9561.
Welcome back to Financial Fitness. I'm Jess Tyler, along with the Money Doctor, Dr. Francis Ram. Hi.
Hi, and Michael Tarquinio from Best Egg is joining us. So we are deep into the data of how a company the size of Best Egg is being very intuitive and very proactive about trying to build relationships with customers, because I think we all know at this point transactional support is not enough, right? We need to treat people like they're people. So I have a question for you, Michael. For repeat borrowers, do you think, because we talked about this earlier in the show, that people will take out one installment loan, then another, and then another in sort of a rolling fashion? Do you think that that's more about cash flow, or is it about staying afloat, if you know?
I think it's probably a little bit of both. I think it really depends on your scenario. Like I said, our data has shown us that people on the upper end of the income scale and the credit score leverage this as kind of like a slush fund, right? So every couple of years they want to do a big vacation, they want to do, buy something big. They'll leverage this as a slush fund. I would say that people on the lower end of the income scale and the credit score tend to need this. You see the repeat business coming back and forth because of the way that things are changing in their economic life. So jobs are changing, spouses are getting sick, children need dollars for educational purposes. Those are the kind of stories that we hear on that side, where the repeat business is to kind of stay ahead just a little bit. It's never to make a giant leap. These people aren't looking to come in and grab $15,000 or $20,000 to go on a vacation. These people are looking for a couple $1,000s at a time over the course of every couple of years to pay off the car problem that they had, to pay off the medical bill that they incurred when something happened unexpected that wasn't covered or they didn't have insurance. So it really does sit in both of those worlds.
Can you tell me, was there some sort of, are you sensing sort of this mental exhaustion from people? I don't know how much you deal with people directly, but in terms of the company doing the research, is there a sense of this mental exhaustion about finance lately that maybe wasn't there, say, a year ago or so?
I think the economic tracker shows a little bit of that. We also do IDIs, which is our one-on-one interviews with our customers, and we'll do them for a variety of reasons. Sometimes to dig into a specific topic, but you don't just jump on an interview with somebody, as you know, and dive right into a topic. You get to know them a little bit.
Yes.
And I could say almost 90% of the time that we're having these conversations, the exhaustion comes through immediately. They're talking about their money. They're talking about their situation. Heartbreaking stories. We had a woman who took out a personal loan. She had contemplated for months harvesting her eggs and selling them as a means to an end for money because she had all of these bills. And she turned to us and we were able to get her a loan and she didn't have to, have that invasive medical procedure. But talking about stress and exhaustion, thinking about that kind of decision, and people who leveraged our financial options to pay for cancer treatments for a loved one. They don't want to be in this situation. They got stuck in a situation where they needed that money. And I think that's the draining part, is knowing that because of the time that they are in their economic life, they just couldn't make it happen any other way. And that burden is very exhausting to them.
Yeah. I mean, the stories are what really bring us to do what we do, right? It's the stories like that that cause you to get up in the morning and go and try and solve a problem in some way. I don't have any sort of lending institutions on the show very often. I have them from time to time when I think that they're sort of responsible, right? I mean, being a lender does not mean you have nefarious means. It just means you're offering something that people need and you get an interest rate in return. the thing we want to make sure of is that people borrow responsibly and they know how to pay back their loans responsibly. And, as you know from our system, that speeds that process up and helps them build the other financial stability that they need. But that emotional temperature you're talking about sensing, I'm seeing across the board. There's still some optimism. People are still like, we're inherently optimistic, like it's going to be okay. We're going to get another job or we're going to do this well. But initially, heads are hanging a lot these days. If you had a magic wand, if you could wave a magic wand, Michael, and fix one thing, one barrier that keeps customers from achieving their real financial peace of mind, what would it be, and what do you think it would take to actually get there?
This is an easy one for me. It's something I've thought about for years. It's a huge gap. You see tiny things, instances of this popping up, but I think there needs to be mandatory financial literacy learning starting at a very young age. Middle school through high school. Listen, I love education. It's obviously very important, but I think there's arguments to be made that there's elements of our current educational system that don't have relevance anymore. I'm an older person. I went through school. We had to take cursive writing. Nobody does cursive writing anymore. It's a lost art, and yes, it's beautiful, but like, was there value in teaching a whole bunch of kids under a threat of ruler to learn cursive writing? So today, I think there are fundamentals in every single person's life that are facts. You are going to probably need to buy a car. You're going to need to get insurance. You're going to need a savings account and some banking stuff. If you're looking forward thinking in children and 529s,
Yeah.
these are nothing. None of these items are taught in school as part of a curriculum that prepares you. And I was watching this comedian recently, and he talks about, learning so many weeks on triangles, and now he's an adult and he never needs that information. But nobody taught him how to do this basic life skills you need from a financial perspective. And it's things that everybody needs to do. And the fact is, you can graduate high school, and whether you go to college or not, you're on your own to figure that out. Now, maybe you're lucky and your parents have some background and they can help and support with that, but a lot of us didn't have that growing up. And it's very much kind of like search and find and try to figure it out. The greatest thing that we have now for younger people is the internet. So you do get a lot of information available to you. But I think without a guided curriculum to get you there or to even give you the basics, you're really just kind of hoping that things work out. And that's no way that we should be running, especially around financial literacy.
Yeah, thank you. What he said, folks. What he said. Yeah, the government puts out a financial literacy course for free to high schools, and I get called into the high school because it doesn't include anything about managing your debt. So I go to the high school, and and people say, or I'll ask, how long do you think it's going to take you to pay off your student loans? And some wise guy in the room always raises their hand and says, forever. They have no idea. And they're 17 years old, having an 18 years old take out these loans. No real idea of what that means. I completely agree with you. At a young age, we need to start teaching people not just how to manage their money, but how not to be afraid of money.
Like so I graduated, high school in the early 90s, shuffled off to college, and every 5 minutes across college campuses, there's tables selling you credit, offering you credit cards.
And giving you a t-shirt.
Yeah, no problem. Who cared about credit? You just sign your name, you get a credit card, you buy in all this stuff that you don't need. And now it's shifted to a real fear of credit. A lot of young people have no idea what to do with credit. They're actually afraid of it, but it's something they need. So, we have to find a balance between not educating them and making them fearful. And somewhere in the middle, they have to understand the value of credit and how to be responsible with it.
Well, let me ask you a question about that, because I find that a very interesting comment. Do you think, so let's just go back and give our followers just a tiny bit of history about credit, right? Fair Isaac credit, or a FICO, that FICO score that you folks see. That's two guys, Fair and Isaac, who decided, hey, this is a good idea to take your credit history and stick a number on it so bankers can look at a number, right? But I'm old enough to remember the day when a bank would actually read your credit report, okay? So now we go by a number. Do you think that, so let me say, I find people complain to me quite a bit that their number is this and they can't get a loan because of it, or their number is great and everybody's offering them money, but it doesn't really reflect what their actual financial picture is these days. Because there's this sort of disconnect, just like you were talking about. Do you find that's the case with credit? That sometimes you see people who are totally credit worthy, but their score is lousy, or the other way around, their score is great because they pay everything, but they're doing it by leveraging their credit cards?
Yeah, I think the scoring thing is very funny to me. The example I always give is like you and I might have the same exact credit score, 700, let's just say, or 720. So it's good, but it's not great.
Yeah.
Except a couple months ago you were 650 and you're on your way up, and a couple months ago I was 820 and I'm on my way down. But a number's a number, and we both have the same credit score, and we're treated the same. And I think that's where we run into a little bit of the problem when we start to narrow things down to a single number, right? It's like, oh, well, look at that number. That tells us the story. Well, no, the story is I just lost my job and I'm struggling to make ends meet. And you just got a huge promotion and you've paid off a whole bunch of credit cards. We're two totally different people with the same number associated with us. So I think that's part of that history that you talked about and some of the problems that it leads to. I think tying back to what we were talking about just a few minutes ago, and I don't think, younger people are coming out of school, any kind of schooling, really understanding like that whole spectrum of the credit score, where they land on it, and the things that they should be doing to climb up it, and why you'd want to climb up it. I think there's a lot there that can be unwrapped. Obviously, not in the time we have today, but there's something there that's definitely of concern.
Yeah, I totally agree with you. We could talk about this forever. We're going to have maybe a minute left, but just want to ask before we close, is there some small thing that your company has done, that your team has done, that has made a big impact?
And I think for our entire team, spending time face to face with our customers and hearing their stories revolutionized the way we approach our customers. But more importantly, when we gather all this research, is we make recommendations back to the business. And getting those stories as part of the bigger picture helped us build recommendations that really are supporting our customers in a way that we build relationships, we build trust, we give them confidence. I think previously, the idea was like, well, you're a transaction. How do we get you in, fill out an application, approve you for a loan, and get you out the door, and hopefully you pay it all back? I think now we understand our people, our customers a little bit better, and that goes into every recommendation that we make. We're big customer advocates now. Where before, I think it was like, all right, how do we make sure that this company is maximizing our revenue?
Yeah, thank you so much. You gave great answers to questions that I wasn't sure would be that easy, but given your position and the data that you collect, I think you did a great job, and I really appreciate it. And I think it's been
Pleasure.
eye-opening to hear. Yeah, I think it's been eye-opening to hear how somebody like Best Egg is, leaning into that human side of finance. And I think that's where you and I connected to begin with. And I just want to remind our listeners and our viewers or our followers that, you know, I know you feel alone sometimes about this stuff and you feel like the bank is the enemy, the financial coach is the enemy, whatever. You're not alone and things are changing. Systems are starting to change. Maybe not fast enough, but they're changing. And so I would highly encourage you to reach out to a professional if you're struggling financially or not struggling financially and just want to manage your money better. And Michael, can I ask you to just give your website address one time for us? And I'll put it up on the screen for everyone as well.
Just go to bestegg.com.
Bestegg.com.
Easy,
Perfect.
easy enough, right?
Perfect.
All right, let's get your phone number, Francis.
Of course, it's 413-773-3333.
And you can always go to hugyourmoney.com. Thank you both so much.
Thank you, Jess.
Yeah.
Thank you, Michael.
We'll be back next week with another edition of Financial Fitness with the Money Doctor, Dr. Francis Rahaim, right here on WHMP.
Will you help us spread the word about financial fitness? Please like, subscribe, and choose all. Thank you. Financial Fitness with the Money Doctor is underwritten by Hug Your Money. So unique, it's patented. Financial coaching and more information at hugyourmoney.com.